Hey, my name is Eva, and this is Blond Quantum, the podcast that breaks down quantum technology into real world business impact. Here, we make the complex simple. No equation, no overthinking, just insight, innovation, and a bit of humor. So don't worry, you don't need a PhD in physics to follow. In each episode, I talk to founders, scientists, and investors about how quantum is reshaping the industries today, not in some distant future. Oh, and if you hear a black cat purring in the background, that's my co-host, very alive Schrödinger's cat, joining the conversation. Her name is Moon. Let's get started. Hello, everyone. Welcome again into the next episode of Blond Quantum Startup Series. Today with me is Yianni Gamvros, a CEO and the founder of quantumsignal. Hello, Yianni. Good morning.
Hi, Eva. Thanks. Very nice to be here.
Thank you for being here with us today. Let's start then. Please tell us a little bit more. What's quantum signals and what problem are you solving?
Right. So we are solving quantum signals is solving a problem that's central to financial institutions, especially to hedge funds, CTAs, also sell-side institutions that are trading, that are essentially building intraday strategies to trade in financial markets. So what we are noticing right now is the use of AI and agents specifically for trading. So these might in some cases be LLMs that are trading for these financial institutions, or might be specialized agents. And what we're noticing right now is a big split that is happening in the market. So the top tier hedge funds are effectively deploying these very advanced models and these very advanced agents to do intraday trading, and everybody else is being left behind. So all the other smaller hedge funds, everyone that is essentially not in that top tier, doesn't have the resources, doesn't have the skills, and the commitment to build essentially these advanced AI models and advanced agents to do this trading. And they're still potentially using technology that's maybe 10 or 15 years old. We saw recently, about a few weeks ago, in early May, late April, there was this big news announcement that Jane Street, one of these top hedge funds, is essentially purchasing $6 billion worth of compute from CoreWeave. And so this points essentially to this trend. It's basically already something that they've probably been working on for several years. It's not something that has just come up. You don't do a $6 billion investment like that
Overnight.
out of the blue. And so it's a trend that is happening. And we already see that the smaller hedge funds, the smaller players, are basically not able to react, right? So don't have the capacity to buy compute. Sometimes they even lack the detailed data feeds that are required from the exchanges, and also don't have the skills, right? They don't have the skills. And now at this stage, they don't really have the time to react to this and try
build the skills and learn and stuff, because it's already too late. They need to react. They need a solution. They need like a package solution. I understand. Okay. And probably when we talk about the volume, you said everyone who is not in first top 10, which means all the smaller one, which is like what, 95% of the market?
Exactly. We're talking about thousands and thousands of firms, and also a big part of the AUM, the assets under management that is being traded, does belong to this essentially anyone but the top 10. We're talking about potentially 5, 6, 7 trillion dollars of AUM, whereas the top 10 potentially cover about 700 to 800 billion of AUM. So it's a big part of the market, whether you look at it from a number of firms perspective and also AUM perspective.
Congratulations. Seems like you're trying to capture a really, really exciting and big market. Okay, but from what you're saying, I would like to go a little bit deeper into it, because you said there is a trend, everyone's going into agent and so on. Does it mean that with a time, the trader job would basically disappear, or it will be like huge hedge fund, I don't know, one portfolio manager, and the rest will be basically digitalized by agent? Is that where we go?
Very good point. So so it's basically very parallel to what is happening with the other jobs that are being impacted by AI. I think it's another tool that will be essentially in the back pockets of the quantitative traders, the quantitative professionals, traders, portfolio managers, the analysts, the researchers. It's basically going to help them to explore new strategies, to implement new strategies much faster. The other thing to point out is that pretty much already close to 90% of all trading is done by algorithms anyway in financial industry.
Okay.
So we have a very small percentage of essentially what we call discretionary trading, people essentially just looking at
Yeah.
screens and making calls. So a big part of especially the intraday trading, but even macro trading is essentially done by algorithms anyway,
Okay, so
right?
this is just a next level, let's say.
Exactly. It's an addition to that. Yeah, it's an addition. The one thing that we are bringing to the table, and the one thing that is a big differentiation in how we're doing things, is that we are essentially building the equivalent of a foundational model, right? So we are building, just like you have LLMs that are trained on text and essentially are producing text in various forms. They're producing free form text, they're producing code. We are training our models on the same scaffolding, this transformer architecture scaffolding that the LLMs are using, but we are using time series numerical data that comes from the exchange. So this is the market data. That's what we're training the foundational model on. And then the model will be producing essentially these intraday predictions, and it will power these agents that are going to be used for trading. So we're not talking here about essentially producing a wrapper for LLMs that essentially analyzes news, analyzes text, analyzes sentiment. All of these things are there, and they're good, they're needed. But what we're doing is essentially complementary, and it's one level deeper. It's industry specific, essentially finance native, as we call it, a foundational model on these time series numerical data that comes from the market itself.
Okay, so that's your core insight behind. I like it. Okay, and then let's talk. Let's step a little bit back and talk a little bit about how did you start the company? Why that specific industry? Why fintech? Where did you find your CTO? How it's all started?
Yeah, great. So interesting origin story is that both myself and my co-founder and CTO, Yianni Gamvros, we both used to work about 7 years ago. We both got hired by one of the very first quantum computing software startups. And we started working there on essentially quantum computing solutions, doing research on quantum computing approaches, and how we were basically tasked in figuring out what are the right applications, what are the right use cases for quantum computing in many different industries. At the time, there was no essentially AI craze, AI adoption happening, definitely not at the stage that we're seeing over the last essentially 2-3 years. So a lot of the people were actually really worried about how quantum computing will impact their industries. And we saw early on that finance was essentially one of the key industries where people were really concerned as to how will quantum computing impact.
And really, what year was that? What year are we talking
So
about?
we started in essentially 2018.
Good
Exactly.
time. Yes.
It's pretty early. Yeah, I think the first announcement from Google on their lab was around, well, the supremacy sort of paper by Google, the first one was in 2019. So it was basically very early on. I think IBM, Google had announced their initiatives. Rigetti was another hardware company, and D-Wave. I think those were the 4 hardware companies at the point at that time. And in terms of software companies, basically you just had QCware, CQC, I think maybe Zapata was being formed sometime in late 2018,
Around
early.
that time, right? Okay,
Yeah.
so you were one of the first. That's perfect. Okay, so you saw this fear, you saw this coming from the financial institution, and then what happened next?
So we were being asked to come in to these very large financial institutions, and we can name some of these names. These stories are public. So we went into Goldman Sachs, we went into JP Morgan Chase, Itaú Unibanco, several others. And we started essentially looking at all the different use cases and all the different hard compute problems that were being top of mind, basically, for these managing directors at financial service institutions. And basically, we're also looking at the current technical landscape within these large financial institutions. And we worked on that for close to 5 years. And we got a good understanding of where are the gaps, where are the computational gaps, and where's the opportunity for improvement, and where also are the technology gaps. And so about 2 years ago, my co-founder and I decided to basically go about essentially solving one of these problems on our own. And that's essentially how we got involved into finance, because we had worked on for many years in these financial institutions. We had a very good understanding of essentially the gaps, and we decided that we can address one of these gaps by and we're better served, and the market is better served by us essentially going out and kind of building our own venture.
Okay, tricky question here. Why would you decide? So I understand you were working on a bigger company, you had the understanding of the market. Why wouldn't you try to build it inside the enterprise that you already were? Why did you decide, okay,
Yeah,
that need to be a separate solution?
good point. Good point. So we had a fundamentally different thesis after essentially working on this for 5 years. So the old way of doing things, and this was not specific to our company, I think essentially it's the way that a lot of the quantum computing startups, essentially on the software side and the application side, um, this is the approach that a lot of them were using at the time, which was essentially to look at multiple industries, multiple use cases, potentially pick one or two for depending on the client, and then take the real size problem and pare it down to something smaller, much smaller, that fits into a quantum computer. Essentially build a proof of concept, a quantum computing application, run some experiments or some simulations on maybe classical hardware or even on quantum hardware, and then extrapolate from there. So this was this typical mode of operations for, as I said, many of the quantum computing startups that were building applications and software. And so we decided to fundamentally change that, and that's why basically we decided to kind of launch this new enterprise. So first of all, the key thing we decided was to concentrate on one industry and one use case, right? I think it was essentially too distracting to look at different industries, different use cases. So we decided basically to look at a very specific problem, this intraday trading problem, systematic trading in the finance world. So we picked the use case, we picked the industry. The other thing was to essentially concentrate on software and concentrate on building a product, right? As opposed to, again, I think the model was back then to potentially offer services because there was a lot of exploration that was being happening on what is the right use case. Let's do a whiteboarding exercise. There was a lot of back and forth there on what is the right use case and where do we go and which use cases do we approach. But we decided to concentrate on software. And then the third and final thing was to essentially start using the best tools available today and use AI to approach the real problem, the full size problem, have a solution for that, take it to the market, essentially prove out that the market will react to the solution, and then slowly add quantum computing once quantum computing can essentially improve that solution.
And I'm really glad that you mentioned that because I wanted to follow up a little bit more. We talk a little bit about what quantum signals is doing. We talk a little bit how it's rely on AI. And so far, we did not talk anything about quantum inside your solution. And we are in Blond Quantum. So I would like to ask you, I need to explain us as well. So what is the part of your solution right now, which is actually quantum, or maybe quantum versus classical or quantum inspired? How would you define it and what's going on inside?
Sure. Yeah. So as I was just saying, we are initially starting by building an entirely classical AI pipeline. So we're at this stage now where we have essentially the first version of our product out. We launched in January this year. We have our first customers coming in. And this pipeline right now, it's entirely classical. It solves a real problem. And essentially active hedge funds that are actively trading intraday systematic strategies are coming to us and basically asking to use the solution. The next stage that we are already developing inside are what we call quantum inspired agents, right? So these are quantum inspired agents, so still running on GPU, still running on classical infrastructure. And they use this foundational model that we said earlier that is being trained on market data, time series numerical data that's coming in from the exchanges. And basically those agents are figuring out what is the best, essentially the best possible strategy to implement in the market and explore how to take advantage basically of the different of the volatility in the market. And so this is the second phase essentially that is in the works right now. And the third phase, which we have already started working in the sense that we're already are doing the research. We've published 2 papers and one is on the way on how to scale training of neural networks, of deep neural networks on quantum computers and how to build these agents on quantum computers. We've published the research and we expect to start essentially doing some hardware implementations in a couple of years. We've already done some initial for the papers, but we expect to do essentially a larger implementation as essentially hardware matures. We get more qubits, more error-corrected qubits that we can use for this. We expect that's going to start essentially in maybe the 2-3 year time frame.
I like it. So you basically what you did, you turned the table upside down. Because usually with quantum startups, which I'm meeting right now, what they usually do, they start from the research, the academia, they focus on quantum computing, and then they're using slowly as they go. They're looking for specific use cases and so on. And you obviously started from the end of it, from getting the use cases and the solution on the classical computing right now, provide it to the customers, make money, build the first traction, and then add quantum computing on top of it. That's beautiful, and that solve a lot of the startups' problem, how to build attraction and attract more venture capital. And I know actually we're going to talk about the second, because I know that you are raising right now your second round, right? Which is a seed round, 4 million euro. Is that correct?
That is correct. So we've already raised essentially 1 million euro pre-seed round that was led by Quantum Nation. And we are now in the process of raising our 4 million seed round. We already have some interested parties, some commitments through safes, but we're essentially right in the thick of it right now.
Fantastic. So, dear investor, if you are watching us right now, that's a good moment to approach Yianni about it. But Yianni, speaking of the fundraising, I need to ask you, and then forgive me if this is a tricky question, but how do you categorize your startup because of your inspiring quantum technology? Do you really consider yourself being a truly quantum startup, or how do you present the startup to investor itself?
Yeah, so actually it depends on the thesis for the investor. Sometimes we don't really go deep on the quantum piece. Maybe they're an AI investor, right? So the way that I look at it is that we are essentially quantum proof, right? So we can scale the company using AI. And then if quantum brings on a big disruption, which we expect that's going to happen, our business plan, our business, our technical team, we have essentially all the tools inside to deal with that. So we're basically quantum ready or quantum proof, if you will, and we can deal with that. Now, some quantum investors want to see a more detailed roadmap and more details on our research and what we do on the quantum side, but it really depends. I mean, the investors self-select, right? Some of them start diving deep into the quantum side. If it's an investor with an AI thesis or a fintech thesis, they basically don't really ask those questions on the quantum side. They want to see basically how the business scales, how does the AI work right now.
This is what I'm asking, because as an ex-founder, I know how tricky it can be when your narration and the story have to be different, basically, for a different type of investors, right? So are you open to speaking with obviously with quantum investors, because you have a Quantum Nation on the board, so you already proved that you can do that. But you are also, I guess, speaking with the AI investor, and you're also open to general investors, DC, like, I don't know, B2B, enterprise, SaaS, or so on. I don't know if it's SaaS, I just assumed.
It is SaaS, yeah. It is SaaS, it's B2B. Yeah, so typically, I think the investors that like us are this kind, right? The ones that have in their thesis, B2B, SaaS, AI, all of the above. Yeah.
Okay. And where is your solution sitting in the stack? Obviously, it's not the hardware, but is it the software? Is it algorithms? Is it application? How do you pitch quantum signal?
Yeah, so it's basically it's a SaaS application. We run everything on our side. So we run training and inference on our side. We consume the data feed from the market in real time on our side. Well, first of all, we take all the historical data in. We train the model, as I mentioned earlier, and then during market hours, we consume the real-time feed. We run inference, so we generate the predictions that the foundational model generates on our side, and then we feed that back to our customers through an API, basically through an API.
Okay. So does that make a lot of sense? But are you taking also data from the potential clients? Are you allowing them, let's say, because you said, okay, we're taking the market data, which are the public exchange data, but do you have any option for the client itself to use their own data if they want it?
Very good. Yeah, very good question. Right now, we don't. Right now, all the data comes from the market. Essentially, we have on our roadmap the capability for the client to provide some additional liquidity that they see in the market. Maybe they have access to some dark pool or some additional, essentially, liquidity that is not essentially public. And they would be able to essentially also send that over to the same model. And the model will be able to take that into consideration before making a recommendation or before running an agent, basically.
Fantastic. Okay, that sounds good. And then, Yanni, correct me if I'm wrong, but when I trying to understand your business model and your operation and so on, I see here a really good risk management from the investor point of view, because really you are in this comfortable position that if I don't think it's gonna happen, but if quantum computing will never materialize, then basically this is not breaking your business, isn't it? You will still
Exactly.
operate as you are, and you'll be completely, which of the quantum startup cannot say that.
Yeah, exactly. We've built a business in a way that it's, I guess it's quantum proof in both ways. You mentioned it earlier, quantum proof when quantum materializes and becomes a big part of the next disruption, but it's also quantum proof in the sense that if quantum doesn't materialize, we still have an active business. But the way that I think about it is that I think we are essentially putting together a template of what a quantum business and quantum application that provides advantage, right? Or supremacy, if you want to call it that, would look like. Because I see too many of the quantum computing startups that I see are essentially producing papers on, let's say, supremacy or advantage. And obviously they do a lot of great research on the quantum side. What happens on the classical side is a little bit of an afterthought. And we keep forgetting that in order for quantum to really take over, it needs to essentially beat
Corporate.
the current benchmark, right? And the benchmark is not only technical, right? But the benchmark is also on the business side, right? So I think we need to essentially prove these two things in parallel. We need to show that what is the current classical benchmark. That's what we're building right now. Have that not only technically proven, but also business proven, right? To have customers on, to show that people are willing to spend money on that solution, and then have essentially quantum come in and be able to
Make it
overtake.
better or
Exactly. Do better and have customers basically start preferring the quantum solution that does something better.
I agree. I think people who are really into quantum and a little bit on this buzz and hype right now, they're forgetting that classical computer will not disappear even when quantum is ready, right? It will still be there. Quantum will have completely different purpose than the classical computing. That's a better, I think, way to say it. But okay, you mentioned that yes, one of the part of why this is important, we need to prove that people are able to spend money on it. So let's talk a little bit about it. You told me before, I think off the record, or maybe you also even mentioned that today, that you already have your first customer. So I would love to you a little bit elaborate about it and tell us who are your customers, what are you doing right now, how many of them you have.
Yes. So we are very excited. We just launched the service in January. We already have 4 signed contracts and quite a few more that are in active negotiation. So out of the 4 that are signed right now and are using the service, we have 1 major European bank. So that's on the sell side. That's important because the sell side, the banks also need to essentially be running these models and these agents, right, to understand basically what's happening in the market. And they cannot always essentially build those on their own, even though you might think of banks as essentially having more resources and more skills and more people, but there's also a lot of competing priorities, right, within
Yeah.
banks and the managing directors and within in those institutions as well. So that's one of our key customers. Then we have 3 others that are hedge funds. So on the buy side, essentially implementing these intraday systematic strategies. Actually, one of the hedge funds is what we would call essentially a top 5 quant hedge fund.
Oh,
They're also based in Europe. They're pretty major. The other 2 are smaller funds, right? So they might have smaller assets under management, but still kind of jumped on the solution right away. They essentially see the need to start using something like this right away. And so this is our initial essentially cluster of 4 customers that are on the service right now.
Okay, so this is very interesting. I have 2 follow-on questions on this because I'm obviously not surprised that some bank decided to use your services because we all know that innovative teams in major institutions are usually not that innovative as we would expect. So that's a bigger problem. But you told me, well, you mentioned it in the beginning that all of the top 10 most hedge funds, they are developing their own solutions. So here you're saying, hey, but one of these top 5 in Europe is actually our client. So how did you convince them to use your product instead of developing their own?
Yeah, I think this top 10, the top tier, might actually some of them might actually buy our solution for benchmarking purposes or just to be aware of what's happening in the market. So typically, these top tier firms always try out every new thing that comes into the market,
I see.
and I think they're going to keep our solution in place for benchmarking purposes. And who knows, maybe they will run some models on the side on our solution as well, and have them kind of running in parallel with their solution. So there's always this concept in the hedge fund world of buying essentially signals, right? So there's a big market of
Sure.
buying different signals from different places, combining them together, and through this combination, essentially informing your decision making and informing your algorithms and building new strategies. So we basically become one more signal that they buy anyway.
You're right. I didn't thought about it. Like, who if that not them, right? In terms of like be on top of the things and the signals all from the back.
Exactly.
That's great. Okay, and those all of these people are signing like yearly contracts, or what is the standard terms that you have for them usually?
Yeah. So right now the standard terms are just monthly, month-to-month subscription. I'm happy to just provide month-to-month subscription. I think people will get hooked to the service, and it's just an easy way to get started. And then once they're kind of really hooked, yeah, at some point I'm sure they're gonna come
That
asking for annual discounts.
that tell me that you must be very confident of your solution if you provide. Are those customers buying the solution because of quantum or despite of quantum?
Yeah, I think only maybe 1 out of 10 customers is really asking us what is happening on the quantum side. Most customers basically don't care. They just want to see a solution that works. They just want to see predictions that work, models that work. They don't really care. They don't go into the details of how it's powered, what is the technology behind. Sometimes they'll just going to ask to do some kind of due diligence on their side to see if
Mm-hmm.
it's something they've tried before, or if there really is something in the back. Yeah, that's part of kind of their due diligence. But as long as kind of it works, they don't care.
That's great. Okay. And then I know this is only a couple of months because you said you launched it in January, but can you share any concrete example of ROI that you generated for clients, even without saying the name?
Yeah. So typically, the customers in this space are very secretive about exactly how much they use the product and how much they invest essentially using our product. So I don't have any information on that just yet. I think the best we would be able to do at some point in the future to be able to say essentially how much AUM in general is being invested through some of these technologies. But what we provide in terms of an ROI proof point, we run our own benchmarks, and actually we make them available on our website. So you can see that, for example, in Q1, and Q1 was a particularly volatile time in the market. There was a lot of movement of all the major indices. And right now our signals are predicting essentially and are helping quants trade on those indices. And basically our signals and this pure strategy, just using our signal, was able to essentially beat all 4 indices by anywhere up to almost 7.5%, right? So there's a big gap into just kind of essentially just following the index and using this intraday predictions that we provide and running a strategy on those. So this is our proof point. This is the ROI that we can provide. So 7.5% in 1 quarter is actually pretty.
No bad. No bad. Even now, all the financial institution, most of the training is done automatically,
Mhm.
right? And intra trading, including intra trading. So the question is, I guess, what what will be in the head of some of the investor, I guess, as well. Can you explain why this solution that you're doing right now in quantum signal could not exist in the, I don't know, even 5 years ago? I don't want to say 10 years ago, but even 5 years ago?
Yeah. Basically, we're using all the new techniques that have been deployed because of this LLM revolution in the
Mhm.
last 3 years, right? So this transformer architecture basically did not exist, right? Did not exist and was not in place even 4 years ago, right? So you had some of these big papers that introduced the architecture, and then the LLMs basically started building that. Maybe the papers. So don't quote me on the dates. I think maybe the papers were maybe 5 or 6 years ago, and
Yeah.
then it went into production really in the kind of 3 year ago time frame. So that's essentially the big change. So the technology did not exist. These methods did not exist, and that's what made possible the service that we have now and we're kind of offering today. And the other interesting thing to note is that the skills to make that possible requires essentially people that are familiar both with the finance world and the AI world, and the combination of finance and AI is what makes this possible. Otherwise, it's very hard to train models anyway, to train
Mhm.
AI models and make them work. Even though we have the papers, it's very hard for people to make that work, and it's also very hard for AI developers a lot of the time, even though they know how to make the AI piece work, to understand what the finance world needs, right? And in our case, kind of the combination of us working on these hard computational problems for some time, being inside the finance world for several years, looking at essentially the technology gaps over those years, over that time frame. That's all of these things created the perfect storm for us to be able to create this solution.
So, would you say that this is your unfair advantage, the combination of the knowledge on AI and LLMs, basically, that are behind all them, and the inside finance world? Because I bet you must have some competitors right now on the market, aren't
Absolutely. So there are multiple competitors in the market.
you?
Very few are targeting this intraday trading space, and very few are building essentially solutions that are powered by transformers. We see a lot of sort of, if you will, standard or classical ML solutions that and other signals that basically that are 5-year-old or 10-year-old ML models and ML techniques. That's what we typically see. And then
Mhm.
the rest of the competitors are really the things that are built in house, right? Which are not really, in some sense, they are competitors. They don't go out to try to distribute them. Really, we don't compete with them across basically every other company we see. It's
That's
just
the one. Yeah,
yeah,
of course. They have no if they develop something good, they have no benefits to offer it to their own competitors, right? And all
exactly.
hedge funds trying to, choose the highest returns. Okay, but you mentioned something interesting which I didn't fully understand, and I think maybe the audience can benefit from explaining it further as well. You said that the transformer AI models are much better than the classical. Is that correct?
Yeah, and then the classical ML techniques, right? So you have
Can you explain the difference between?
sure. Yeah, you have, I mean, 10 or 15 years ago, you had all these classical ML techniques, anywhere from decision trees, random forests, and
Oh,
XGBoost, like
there.
all these different techniques, and, good old regression, right? So people were using those actively. And actually, a lot of the hedge funds, a lot of the quant hedge funds started using those techniques. But markets change. That's the other big issue here, is that you might find a certain pattern in the market. It works for a certain amount of time, and then essentially the edge goes away. You want something that adapts, that can essentially detect new patterns. And the new way of finding patterns are these essentially transformer architectures. That's what the LLMs do. Essentially, they're pattern detectors, right? So they understand that, what comes after. If you give it like essentially half a sentence, it knows what goes after, right? That's why
Yeah.
it's able to produce the text, produce the code. Obviously, instead of using that on text, we want to use it on the market. And in some sense, the problem on the markets is, in some sense, it's harder. In some sense, it's easier, right? So we in the markets, you have this zero sum games. You have competitive behavior. You have people that are trying to essentially mislead other competitors, and you also have a lot of noise. So you have to be able to deal with all of that. I mean, that's essentially being a big part of this finance aware architecture. And
Signals. Okay, but this is very interesting, and I didn't understand that through the classical. You mean like the old AI models? But here I'm now surprised because you mentioned that you're still seeing it in some of the usage. So there are still people who are using those old AI models, pre-GPT, pre-OpenAI, LLM models that we are right now using the transformers. Because when we think about it, and I remember that from my studies, that was 15, 20 years ago, they were pretty primitive, right? And very limited in their possibilities.
Yeah, you'd be surprised. You'd be surprised still how many people we even find just using plain old regression models, right? And kind of doing things with that. I mean, the finance world is large. There are thousands and thousands of firms, and there are cases where these models work. I mean, I'm not going to say that there are essentially effects that can be recognized, but also yeah, the edge or maybe the return you can get out of some of these detections are kind of becoming smaller and smaller. I think that's why there's more interest now in doing something different. Also, I think it's another interesting thing to point out is that people are starting to use LLMs, but not specifically for a trading decision. So LLMs can be good for maybe doing portfolio construction. Maybe they can uncover news in the market or a certain stock that something might be happening. There might be some report out there that essentially mentions a new drug or a new company, a new competitor or something. And a lot of people are now doing research on the market with LLM. So we see that happening, yes. But that's not trading, right? That's kind of research. And also a lot of people obviously use LLMs to code new algorithms. So it's easier to now iterate on algorithms and doing essentially different versions of your algorithm and trying different things. So we see all of that happening, right? But again, what we're doing is essentially applying these techniques specifically to build models that are trained on this time series data, right? And kind of detecting patterns in the time series data from the market and then essentially turning that into trades. That's the thing that really very, very, very few people can have the capability and are implementing right now.
That's really great. Okay, again, I'm looking on a little bit of a timeline because I really enjoying speaking with you. It's all very interesting, but we probably need to wrap up shortly. I have a couple of more questions for you about the prediction and the future.
Mhm.
This is my tradition. I love picking the guest brain on what's gonna happen next. What would be the biggest misconception about the people may have about companies like yours?
Okay, well, if you have this technology and it works, why don't you trade it for yourself? Why don't you become a hedge fund yourself? So I feel I have to answer that because I think a lot of people are thinking that in the back of their mind. And I think
Yeah.
it has to do with essentially founder market fit, right? So we came up from essentially math backgrounds, my co-founder Jordanis and I, math, computer science backgrounds and technology backgrounds. And we kind of had this big exposure into the finance world a little bit later. So we're not essentially we didn't grow up within the finance industry itself, which also kind of gives us this separate perspective, right? So we feel the path for a company is through essentially this VC backed tech startup path, as opposed to a finance founder that would have essentially maybe tried to build this technology and then started raising capital for investment. That's different type of investors. You need to find LPs that do that. So the founder fit is definitely different. The other part is that we feel we can disrupt the market and we can make a lot of money in the market by essentially doing this picks and shovels approach, right? So there's two ways to make money in a gold rush. You either go the golden nuggets or you sell the picks and shovels. So we decided to go with the picks and shovels model. And so it's not like we cannot make money or we cannot be successful that way, right? So these are essentially the two key areas where and two maybe misconceptions that might exist or people might have that in the back of their head.
I probably also biased because I spend most of my life in tech, so we are all biased one way or another. Okay, and then I didn't mention that before. I think we didn't spoke about it, but you told me that you have two offices right now, and one is in San Francisco, one is in Paris. You have a small team in Paris. Where do you see the strongest ecosystem so far for what you are building? Where is the best market?
Yeah. So we made the decision. So Jordanis is based in Paris. I'm based in San Francisco. So we made the decision as we were starting the company to just essentially everyone stays kind of put and everyone starts building a team around them. Jordanis is our CTO and the technical team. He's building the technical team around him. And also the other good thing about Iordanis is that he's the research director at CNRS. He has a lot of deep connections with a lot of PhD students that are coming out of the different programs. So we can hire from
supply of talents.
Exactly. So that's key. And also for a young company, right, we cannot go out and compete here in San Francisco with AI talent that is here in the San Francisco Bay Area, whereas we can essentially compete, and we know people that are essentially coming out of schools and other companies
Universities. Mhm. Well,
in.
I actually, no, I'm not surprised. Definitely, it's a very good strategy of being cost effective. Also, the specialist and talent in Europe, I think, is a little bit cheaper than here in the US on the local market. And France is very well known right now for having excellent schools and excellent quantum engineers. So many startups, and I think so much focus as well from the government. Speaking of, I would like to ask you how important it is for you to, with a or getting any support from the government, because this is also a very big hot topic right now amongst the startups that are getting a lot of grants or procurement support in UK, for example. Is there in your space, because you are so much right now commercially driven, is there any support that you may getting from the government or not?
Yeah. So, and actually, we did get support from the government. So we did get 2 grants, which I'll mention shortly here. And that was another kind of reason, another factor that played into our decision to base the company in France and essentially have a wholly owned subsidiary in the US for the US operations. But the company and the IP and the investments are made essentially into the French entity, which is the parent entity. And we felt that we were already connected through Jordanis with a lot of the French entities and the French organizations that can provide early support. And initially we needed that, right? So now, yes, we're getting into the situation where we are essentially building the product and going out and getting customers and having some revenue, and we're trying to grow that. So we're not looking as much towards grants. But initially, 2 years ago, when we were just getting started, basically, we did apply for grants, and we did receive the Innovap Leader Award from Paris. And then we also received another award from the France region, which was basically called Pack Quantique. It's awarded to new young quantum computing startups that are building innovative quantum computing applications, and they're working with a partner, right? And the partner, and this is public, the partner is for that award is Societe Generale. So we kind of got together and applied and won that award. And so these are 2 of the key awards that we won early on and helped us significantly as we were kind of going through the first stages.
That's great. So you basically proving that those early stage support in grants, in cash, in contracts from government is really important. If you would not set up the company in France, would you have the chance to get a similar support from US government or not really?
I know there are a lot of grants that exist in the US as well. I think in some cases it's trickier. There's a lot of awards that go directly to academics. This is the case, obviously, in Europe as well, maybe to a lesser extent. Yeah. I don't want to say that it's harder because, in some sense, even though I'm based here in San Francisco and I know the US side of the equation, I actually know it less. Now that we were based in France, we went after some of these awards. I know how the system in France now works better,
Mhm.
and it helped us quite a bit.
And maybe San Francisco is also more competitive, or I don't know, from around the
It could be. Yeah, absolutely. I'm not discounting that.
And you mentioned obviously that you have this, you basically were enabled from their day first to the French ecosystem because of your co-founder and his involvement
Exactly.
in CNRS. I know, but maybe you can explain what CNRS is actually, because I don't think our audience is aware.
Yeah. So it's one of the biggest research institutions in France. Yeah, so they have obviously multiple departments in different areas. Jordanis was leading essentially quantum computing, the research director for quantum computing at CNRS. Yeah, not sure what else to say. This is one of it's very well recognized. I think all of Europe now is in all of Europe. It's very well recognized and produces a lot of good research. A lot of essentially good researchers are coming out of that. And yeah, it helped us significantly. Well, having Jordanis there, basically, we played our strong card, and that's why we built a company like we did in France.
Yeah, I think it's a perfect setup. I
Mhm.
think it's perfect setup to be on both sides and
Mhm.
get the best from both worlds. And Yanni, I would like to ask you right now, what kind of milestone should we be watching for quantum signals in the next 12 to 24 months?
Yeah, so we are focused on two things. One is producing more and better signals, right? So we are publishing our benchmarks on a monthly and quarterly basis. So we will be improving the quality of the signals and the amounts of different signals and these intraday predictors that we are producing. We'll be doing futures, the futures U.S. futures contracts, as well as single name equities in the US, so single
Mhm.
name stocks in the US. So that's coming in the next few months, effectively. More customers. So we are looking forward to making some public announcements on customer acquisition and then customers using our product actively for trading bigger and bigger portfolios.
Yes.
And then also raising our seed round. So we would be essentially at some point be making an announcement on how the seed round is going and size, investors, that sort of thing.
How many clients would you like to acquire in the next 12, 18 months?
So my goal is to finish 2026 with somewhere in the 15 to 20 range. Well, I think, yeah, I think we can maybe sign one or two every month for the next
Mhm.
few months until the end of the year and kind of get into that 15, maybe, 15, 20 range.
That sounds like a lot of work. I will be very busy for the next couple of months. And if I can ask you, I just shouldn't because really of the time, but I can't stop myself. How are you winning those clients?
Yeah, so the good thing is that, when you're publishing results and predictions on the market, it's actually, the proof is there, right? So you
Mhm.
can't hide from it. So
Big-
people are looking at the results, previous performance. They're signing up to basically start tracking real-time performance. So it's very kind of black and white, right? It's not qualitative at all. It's all in the numbers. And basically every day we're producing these predictions that basically say whether a certain index, for example, the S&P 500, if it's going to go up, if the market is moving one way or another. And so people can trade on this, right? So that's the core of our product. And so it's very basically we get tested on a daily basis, right? And in most cases, people want to see a little bit more, collect a few more samples on a daily basis, and they can make a decision. So that's pretty simple actually for us.
And I guess the hedge funds, they can be very fast on making those decisions, right? But how about the banks? Do you have any secret? How are you escaping those famous 12 months enterprise sales cycle or not?
Yeah, unfortunately, I still have not found the secret for that. If you find it, or if you want other guests finds it, please let me know. But yeah, it's the same kind of very slow cycle. But yeah, what helps is to essentially have the support of the business, right? So that's
Yeah.
always the case. So if you have the support of the business, then you can push from both directions. So the business side can push internally, you can push the procurement externally. It still takes essentially forever to sign some of these contracts. The contract we did sign with the European bank was definitely very painful. It took months upon months. Yeah, I don't have any, but you're right. The hedge funds are much faster. So we're kind of planning on maybe adding another bank within the next before the end of the year. If we can kind of squeeze it in there with the procurement cycle, but hedge funds, we expect that we can be add maybe.
Yeah, they are like, okay, great, perfect. Last question, really last one. That will be about the prediction. So, Yanni, what would be the boldest claim that you are willing to make? You can make it about quantum industry, you can make it about
Yeah,
your finance industry, you can make it about your company.
yeah.
Free shot here.
Yeah. I think, I'm going to concentrate on kind of what we do and what we know best, which is essentially building these AI agents. I think they're going to take off very, very quickly. And I think we're even going to see some prosumers or essentially individual quants using them. I think that's essentially the new way that people are going to be trading. No more essentially discretionary trading, or it's going to become less and less of a thing. And essentially we're gonna be seeing more and more AI agents basically actively trading in the market. Yeah, we're gonna see this back and forth we see from with LLMs right now. So you have LLMs and then you have user A prompting an LLM getting essentially a certain response on that prompt, and then user B is prompting the LLM in a different way, right? And a different prompt and getting essentially a different response. This is the kind of thing we're going to start seeing with AI trading strategies. You're going to have one quant or one trader basically prompting these AI models in one way and getting one type of strategy, one type of trading strategy out of the model, and then another way essentially prompting another user prompting it in a different way, getting a different type of strategy out of that. So
Kind
that's
of science fiction. The the agent will be fighting with each other.
yeah. It will happen for sure. It will happen. I think that's the only certainty that I see in the trading future.
That sounds very exciting, but at the same time very terrifying.
It is a little bit, yeah. It's not clear exactly. I mean, we've seen some in the past, like algos kind of going haywire a little bit, especially high frequency algorithms cause some flash crashes as they were known. So we will see some of the effects of this over the next few years for sure. But I think we need to prepare for that. There needs to be regulatory framework, other types of oversights, other types of guardrails there for that. But I think you can't stop the progress of technology.
I can assume that before the regulation will pop up, a couple of people will get very, very rich. And that's always happened, right? That was the case. But I wanted to ask you, what's the time frame? Are we talking about this future coming into 5 years, 10 years?
No, I think the technology is coming much faster. We've seen from the advancements in AI and how the advancements in LLM and what we can do now with coding that things are moving very, very fast. We're talking about frameworks and time frames of months. Maybe 12
Okay,
months.
so let me ask you a different question.
Mhm.
In what time do you think most hedge funds will have either solution like quantum signals or something similar? So basically agent trading, intraday trading, but also different kind of tradings. That is in the most, you think? Or they're gonna happen in a year, 2, 3?
Yeah, I think we're talking about maybe year and a half to 2-3 years. I think.
Wow.
Yeah. Yeah.
Wow.
I mean,
Okay.
we've seen what has happened with LLMs and coding and all of that. I think
Yeah.
a lot of the financial industry is conservative, right?
Yeah.
They're already using LLMs, so they already see the power, and so now giving them something that basically transfers that same type of power, same type of tooling, but transfer it basically to their own domain. I think they're gonna start making the switch very, very quickly, right? So yeah.
Perfect. And that's what I wish for you and for quantum signals. And I hope if we met in 2 years from now, you will be like, I don't know, raising Series C, maybe B or C, or maybe preparing for IPO. Who knows? Seems like a lot of opportunities, and you will be definitely very busy. So I hope you will find time to come back at some point.
Of course. Yeah. Happy to do so. Yeah. Yeah. We'll
Thank you.
definitely.
It was a pleasure.
Great
Take care.
discussion. Thank you so much, Eva. Thanks for the invitation and for the great discussion. Thank you.
Bye bye.
Take care. Take care.
That was Blond and Quantum. Thank you for joining me on this journey through the quantum business frontier. If you liked the episode, please review it on Spotify or Apple Podcast and help more people discover the quantum world without needing to untangle the theoretical physics. See you next time, unless the cat changes the timeline first.